The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network.
Welcome to Let's Talk Money with KC. I am so excited that you're tuning in with us today. I have an amazing show, an amazing guest today. Before I introduce her, I just want to explain to you what Let's Talk Money with KC is all about. We are here simply to educate the masses on how money works, how you can create an amazing wealth for yourself by utilizing different strategies, different industries, buying real estate, the list goes on and on and on. So every week I want to bring on, or every other week, I want to bring on a guest that is really pertinent to something that I've already spoken about, or something that someone asked me to actually bring up, or something that works hand in hand with money, creating wealth. Making sure that we understand the dynamics, the process within that. So today, we're going to actually talk about titling, and what that means. And my guest for today, her name is Michelle Woods from Interstate Title and Escrow. And it's really amazing. Michelle and I met probably about 5-6 years ago.
It's been a hot minute.
It's been a minute, and we just kind of connected. And you know how you know someone that you network with, and you guys think on the same wavelength, and we just became the best friends. So I figured this would be amazing for her to come on the show. A couple of weeks ago, I actually had a real estate agent on talking about first-time home buying and what the process was, and then I had Michelle and her on to kind of talk about the integration and what titling means. So I felt like today I should actually just kind of let Michelle go on being a little bit more specific about titling, the process, and what it means. So before we actually get into the nuts and the bolts of it, Michelle, I want you to introduce yourself and tell them where you're located. And then we're going to start just talking about this whole titling process and what it means and the understanding, because I'm going to tell you, I was one of those. And you know, I have built many homes, and really, now that I'm thinking about it, titling wasn't really the question. I mean, I didn't know. I knew that was a part of it, but I didn't know the specifics and the ins and outs of it. So let our viewers know who you are, where you come from, give all your contact information, if you're on social media, all of that, so that they know how to contact you.
Okay. My name is Michelle Woods, and I'm the owner of Interstate Title and Escrow, and we're located in Charlotte Hall in northern St. Mary, southern Charles County, Maryland. We do service all of Maryland and all of DC. We have a great network of folks that can come out and do settlements in areas that seem outside of our area. And we kind of specialize in coming to the client as opposed to the client coming to the brick and mortar as would be traditional. So you can find us on Facebook and LinkedIn. Our office line's 301-830-8080, and you can always email me at Michelle with 2 L's at is, like Ida and Sam, title.com.
Okay, great. So tell me the role of the title agent in the whole real estate process and closing. Tell us about that.
Okay. Well, most folks think we actually just show up at the table and you pay me a pile of money to just sit there for an hour and explain paperwork to you. It actually goes much deeper than that. So when that contract offer is signed, whether you're building new construction or you're purchasing a resale property or just raw land, it doesn't really matter. We're going to go through a process where we start from going to the county records, looking to see first, does the person who's presenting themselves as the owner actually own the property?
Okay.
Are all the owners of record still alive? We do
Okay.
have where they've passed away and they don't know what to do with all that.
Okay.
Or there's a spouse, they divorced, and in the court order for the divorce decree, the one spouse was awarded the house, but they never prepared the actual document to do that passing of title to the next person. So we're going to pull all this information from a lot of sources: to judiciary case search, the land records, the tax records, the state assessment records. We're going to pull all that together, and we're going to see what's going on, and then we're going to review through all those documents to determine, is the property you're buying really the property you think you're buying? Did they subdivide and sell out a piece? Do they really have what you think they have? Or you think you're getting more than they think they have? We encourage folks to get surveys to verify geographically you're getting what you think you're getting. Because sometimes you buy a property and there's a big field next to it and you think, oh, that would be great. My kids can play there. That's my big field. Really, your big field's not your big field. Nobody cared about the big field, so their kids played in the big field, but the big field doesn't really belong to you.
Right.
So we're going to go through all these processes, clean up anything that would be an issue, missing owners, decedents, liens, judgments, things like that. And then we're going to take all of that and compile it together, and then we're going to issue out these commitments that say, this is the health of the property, this is the status of everything, so this is the information. We can close on this based on these facts, or we need to clean up this, this, and this. So we have a very behind-the-scenes kind of deal. Most people have no idea who we are and what we do.
Got it. Okay. So now, in your specific, is there, your expertise, is it kind of divided into certain areas that you've kind of gone into, or?
Yes. So I consider us one of the pieces of the trifecta of real estate. So you have the realtor, you have the loan officer, and you have the titling company. You have other services that come in with that, like appraisals and stuff like that. But we're the main three who are really involved in that transaction. So our area of expertise is actually the legal pulling together of everything, because we're making sure everything's legally transferring. So even though the agents go through the contract, which is a very legal document, when you sign it, you're agreeing to what's in it. So we're taking that legal document and all the legal documents of record, and we're putting together new legal documents. Like if you sold me a piece of property for $100,000, we're going to then have those documents prepared so you legally transfer that to me. And then if I'm getting a mortgage, to make sure that that is a safe and secure debt on that home. So that's kind of where our field comes in. It's almost like it's a quasi-odd area of practicing law without practicing law. We don't really practice law. I can't, save you if you commit a murder. Don't come to me. Tell me you did something bad.
Oh, my Lord. Okay, so that kind of speaks to something that I read, and I brought this up the last time. You had some situation with a client online that you had to kind of really dig deep and figure out who owned
my little guy who passed away.
Yes.
Yeah. Yes. That was a lot of work.
Yeah, but honestly, you did above and beyond to kind of fix that for the family.
We're actually going to close in December.
Really?
Because beyond that, on top of that, I didn't know this, but when the guy passed away, his house is already in peril of foreclosure, which we fixed that for the other guys, but we can't fix his foreclosure because he's legitimately in foreclosure.
Okay, so they don't know what you're talking about. So
foreclosure is when you stop making...
No, not that. The whole, all these
story.
different properties.
Well, they should have watched me like a month ago.
Oh, my Lord. Okay. Give them just like a little recap. Just a little recap.
So we had a gentleman, older gentleman. He was ailing in health, and he was trying to sell a lot to get his house out of foreclosure. He was behind on his payments, and they only had basically Social Security coming in. So when we pulled title on this one lot, we found this old mortgage. Basically, it was an error, not that you probably understand all this, basically it was an error that a former title company did. They hired a national title company out of Florida. They weren't paying attention and specific to his property. They re-encumbered anything he had left. So they put a mortgage against two of his son's houses, properties, a stranger's property that he had sold 2 years ago, this vacant land, the open space for the neighborhood, because it's like a small mini neighborhood, and then the intended property. So all these properties were wrapped up in this, and we had a foreclosure pending on the property, which would have retroactively affect all these other homes.
Okay.
So we're here, we get the paperwork that we need that says these other properties are no longer affected. We file that. So we're like, okay, where are you on the estate? And they're having struggles. And the wife was a war bride from the Philippines.
Okay.
He was a Korean war vet.
Okay.
She didn't speak great English, and she was having a hard time understanding. So I said, well, let me call down and register a will, see what's going on down there. Call down there, and they're like, those people, they need a lawyer to come in and help them because the bank is going to take the property. So what it was is we found out I didn't know, people smarter than I know, in the state of Maryland, when you're in foreclosure and you die, the bank can appoint a personal representative or executor over all your assets. So they were going to take this man. It was going to be a mess. There was no way I could hang on to this property for this family to help fix some of their financial issues. So they got a lawyer and they were able to get appointed personal representative. So it got way deeper, and we just got word yesterday that we can close in December.
Well, congratulations, because that really reading it sounded like a serious nightmare.
Oh, it was.
And, that's really crazy. So if you're listening and you have any questions for Michelle, please feel free to call WBGR. The line is 301-429-9247. That way, if you have any quick questions, she can possibly answer them for you during the show. Okay, so another question is, what is the chain of title, and what does recording, filing a document, aka the instrument in the land records mean?
So when you're looking at title and you're researching back, we call it chaining title. Okay. So imagine a link in like a chain that's holding a gate shut, like an old school chain on a cattle gate. Okay. So each link is an owner. So you have this owner, this owner, this owner, this owner, this owner, and they all have to connect together somehow. Okay. So all former owners either have to sign the next instrument, or we have to notate that they have passed on, or there was an estate, or what have you. Okay. If we leave somebody off, so say you and your dad, or your mom, because your mom's passed, own property together, and you were then selling it as the rightful remainder owner, and we neglected to mention on the next deed that she passed away. That is considered a break in the chain. So we don't know what happened to mom. So we're just left out there wondering, did you just neglect to bring mom to the table and you just kick mom to the curb? Did we do something wrong? Did we do something fraudulent? Because people do. So when the next person goes and researches, we're like, what happened to this person, this owner? So that's what the chain means. Okay. And the actual documents, we actually call them instruments of record. Because, and you use the word instrument, people sometimes think of like trombones or trumpets, an actual musical instrument. So the document itself is the instrument that goes to record, and we physically take that down to the court and it gets a stamp to say, this is of record. Because when I sign it and I say, hey, I've signed this deed, and I pass it to you, I'm like rightfully passing you ownership. It's yours. Physically, it's your property now. But until you take this down to the courthouse and record it for the world to see that you're the owner, it's not truly public yet. Doesn't mean you don't own it. It's just nobody can figure that out.
They can't verify.
You can't see it. Right.
Okay. Got it. Okay, so before we go to the first commercial break, I want you to give everyone your information one more time, and then we'll go to a commercial break, and then we'll be back.
Okay. So Michelle Woods, owner of Interstate Title, and again, we're located in Southern Maryland. Our website is istitle.com, and my office line 301-830-8080. Thank you.
And I'm Casey from Casey Baker and Associates, and we are a financial broker here in the Washington metropolitan area. We have two offices, one here at the Harbor and one in Tyson's Corner. We are here to ensure your financial wellness. Any types of money, future money, we can help you make sure that you hit your financial goal. So here again, we're going to go to commercial, and we will be right back. Hello, my name is Karen Baker, founder and owner of Casey Baker and Associates. Casey Baker and Associates focuses on promoting financial security through ensuring financial wellness. Our vision is to foster financial wellness by serving the community, teaching wealth-building strategies to all communities, and developing mentorship programs for the young individuals. Casey Baker and Associates takes an educational approach so that everyone in the community can understand the concepts that help to improve financial literacy. As a financial advisor with over 2 decades of experience, I plan to use my expertise to serve you and your financial wellness needs. I am an established author of business and financial articles. This includes writing articles for It's Your Business Quarterly magazine for over 10 years. I also served as the ambassador for the Prince George's County Chamber of Commerce for many years. I am a certified financial education instructor and business leader who is ready to work with you and the wealth-credentialed Casey Baker and Associates team to help you achieve your financial goals. Join us so we can help you, like we have helped thousands of others by connecting with us at www.caseybakerandassociates.com. Welcome back to Let's Talk Money with KC. I am so excited to have my guest here, Michelle Woods, the CEO and founder of Let's Talk
Interstate
the CEO,
title.
right? The CEO and founder of Interstate Title
You want
and
to trade
Escrow.
jobs?
I know. I'm going to hand it over to you, right? But prior to us going to commercial, we were talking about the role of the title agent and kind of explaining what your area of expertise is, as well as the chain of title. So now we've gone through all of that. Tell us what a deed is.
So the deed in Maryland, I'll talk specifically about
Okay.
Maryland, even though we're licensed in both states.
Okay.
In the state of Maryland, the only thing that can transfer property from one individual to another is a deed or the operation of law, like a foreclosure.
Okay.
But only a deed. Some people think that upon the passing of their great-granddaddy and they left them their property in the will, that gives them the ownership. It absolutely does not. They'd have to open an estate. The estate would then sign and transfer that over. So the deed is that instrument that's actually going to give you that right in possession of that property. And without it, you don't have a right in possession of the property.
Okay, so for instance, if something is going on with, and this is real life for me, when I was thinking that they were going to become ill, I had them put my name on the deed. And I know, and this is just a caveat out there, if you have elderly parents and they do own property, if something happens and they have to go into a home, 9 times out of 10, they will own the property. I mean, once it's sold, everything goes to them. So you want to make sure that someone's name is on the deed. So I had them do that like maybe 10 years prior to them actually getting sick, because in certain states they can go back to 7 or 8 years.
Yeah, I think Maryland's 5. I'm not 100% on that, but I think it's 5.
Okay, so I know with my parents were in New Jersey, so they could go back 7 years. So now that's really important if you have children, you know, and you have property. You want to make sure, because you just don't know what the future is going to hold when it comes down to our health.
Absolutely.
And it's not really an age thing. You know, I was looking at it from that they were coming up in age, but it really isn't an age thing, because...
Well, my dad was 65 when he passed away, and his health was already starting to fail. But my mom was fine, so we didn't have to really worry about that till after he passed. We had to encourage her to think about what's going to happen in the future. So usually what I do in those cases is I ask them to speak with, first, with a estate planning attorney.
Okay.
Because I'm like you. I believe that Uncle Sam needs to stay out of my back pocket. And I want to make sure, because this is how I look at it. Your parents worked very hard. Sorry, I stopped banging on that table. Your parents worked very hard for what they have. They've already paid their debt and dues to Uncle Sam. He's got his share. So you want to make sure that Uncle Sam is not going to get an extra share. You want to keep your share. Your parents work hard to leave this to you. And in a lot of cases, like when my grandmother passed away, she didn't have, you know, big life insurance policies and vast wealth here and there. She had enough to bury herself and stuff like that. She had a home, and she insisted on keeping that mortgage free until her death, so that was for her children. That was their legacy to pass along. So, and the children sold it because, you know, they're all grown with kids of their own, and some of them even grandkids. So you have that to pass along. So she put hers in a trust because that was what worked best for her. So I think in each state, you want to make sure you've protected it. If your parents are starting to ail, that you've done it before a time period that works in your state for the nursing home reaching out its long arm to get it, so that you know, because we may not care. Like, ultimately, if my mom mortgages her house and it isn't there for me to have when she passes and we can sell it and pay it off and that's about all there is, there's no money for us, I don't care. It's fine. But it's troublesome for the parents. They want to make sure that these things are taken care of. So adding yourself makes it also so if they start to falter and you've put in place powers of attorney, you can mortgage or sell these properties in order to pay for that additional care that they're going to need, which could run good money, you know, depending on what's going on.
It can run a lot of money. So, you know, I just want to kind of throw out there that that's why we have to plan. We have to plan for the future. We have to cover our assets. We have to put processes and plans in place so that if an unknown happens, we're covered. And that's why it's so important with this whole insurance thing and wealth building and retirement planning and all of that, because we're planning for the unknowns. We're planning for the future. We're hoping to retire, you know, but if, retirement is a dollar figure, it's not an age, you know. You know what I mean? So what is now the deed of trust or mortgage?
Okay, so in many states they use a mortgage. It depends on what state you're in and how that instrument is used in the basis of foreclosure. Here in Maryland, they mostly use a deed of trust. It has a trustee. It goes through a quasi-judicial process to foreclose. It goes through the courts, but it's not like you show up like you were getting sued by a creditor and they're actually taking you to court. Okay. So the deed of trust is where you sign. So if you have cash, you can walk in, pay cash. The only instrument that will be recorded is the deed transferring from one individual to another. Okay. The deed of trust or mortgage, and we use mortgage at the table because people understand mortgage more commonly. Like, even if I pass it to you and explain it, I say this is your mortgage because that's the word they understand. But the actual technical term is the deed of trust. And you're signing that instrument and you're saying to the bank, I agree to pay back my mortgage, and if I don't, I'm pledging this collateral, my property, for you to take. Kind of like your car. You sign your car note, and if you don't pay the piper, the repo man shows up and hauls your car off. Right. Well, because it can't haul your house off. I have people actually think that they repo the house. I was like, they don't repo your house, man. So like little tow truck shows up in the driveway. It's funny. It's so funny. So instead, they go through a court process because you didn't pay underneath the rules and guidelines of the state and the deed of trust. And then if it has to go so far and they've gone through the lengthy foreclosure proceeding and you're still living there, then the bank has a right to evict you.
Got it. Okay. All right. So if anyone has a question for Michelle from Interstate Title and Escrow, please feel free to call 301-429-9247. Okay, so now we talked about the title, the deed of trust, and the mortgage. What's a note? What is a note?
Okay, so the note is a personal obligation to the debt. The note, when I sign that, I say, I, Michelle Woods, am personally obligated to the debt. I agree to pay you back. It's like writing an IOU. You borrowed money from your mom and she made you sign an IOU. I'm going to give you the money back. So if I don't give you the money back, though, so what? You know, I just signed a note. You can take me to court and sue the crap out of me, but that's about it. So that's why the note and the trust actually go hand in hand. Got it. Okay. So the note I sign saying I personally agree, which means you can attack my credit if I don't do what I say I'm going to do. Okay. And then if I further don't do what I say I'm going to do and certain protocols and times have passed and the bank goes through the proceedings, you're going to come and you're going to take the collateral for the debt. So we do have some folks, like a lot of military come into this area. One of the spouses typically isn't working. So one of the spouses will be the credit-worthy borrower because they have a job and everything. And we'll put the other spouse on record as well. The credit-worthy borrower will sign the note for the personal obligation to the debt, and the spouse will join in and only sign that deed of trust pledging the collateral. So all owners sign the trust, all borrowers with the credit sign the note. Does that make sense? Okay. You can say it doesn't.
Yeah, that you kind of threw me on that one. Say it again?
So they're two separate instruments. Okay. So the note says, I pledge my credit. Okay. I'm saying that you can affect my credit I am the personal obligor to this debt.
Got it.
And then the trust are all the owners of the property saying, if this person doesn't meet their personal obligations, we pledge this property.
Got it.
And so the trust says, I'm pledging the property. The note says, I'm pledging my credit.
Okay. Got it. So now, if something happens, and I'll use that example, if something happens to the husband who's in the military and the wife doesn't work, and since she's on the trust and the deed, she's now responsible.
Yes, actually, it's funny. I just had this morning. I had a non-borrowing spouse at the table. She had an ailment and was ill and couldn't work anymore. And so she had to sign certain things, so she was really confused by that fact. And then she said, well, if something happens to him and he doesn't pay, the bank's not going to come and get me. I'm like, well, they don't throw you into jail or anything. Anyway, I mean, people get really confused about how this works. I said, it's not like they're going to go haul you off to debtor's prison. I said, but...
Debtor's prison.
Debtor's prison. Come on now. You used to have to go to debtor's prison. I've been to Williamsburg. They have a debtor's prison down there.
Really?
Not a real one. It's the old Williamsburg debtor's prison. It's really kind of cool. Okay. Well, I wouldn't want to be in it because it's really kind of scary. But that's what they used to do if you didn't pay back your debt. They'd throw you into debtor's prison. So she was concerned that the bank was going to come and get her. I said, well, if you don't pay, you just signed pledging the collateral. If you don't pay and he doesn't pay and nobody pays, the bank will start foreclosure proceedings and they will go through it, and then the sheriff's going to show up and the sheriff's going to evict you out.
Right.
So technically they're not going to come for her, but they will come for her property. So it was hard for her to quite grasp, I'm not the borrower, but how
can they come after me still?
Right, because she gave authority.
Up front.
Absolutely.
Okay, so now, why do we sign so many documents at closing? I feel like I'm giving my firstborn every time I buy a house.
Absolutely. So years ago, I saw the best commercial. It was by Bank of America, and they said, this is a paper reduction act. And the guy came over and took one piece of paper off the top. It's hilarious. So every document you sign is because somebody committed a fraud. So even though it looks like all this paper...
You've got to be kidding me.
Oh, absolutely. You're signing, certifying these things. And some of it is like certain documents have a time limit on them. They're good for only 60 days or 90 days. You signed them when you did loan application. Now they're going to expire and they need you to recertify these documents so they can do like a vetting after the closing's done.
Okay.
And they're, again, only good for the 60 or 90 days. So you're kind of signing things 2 or 3 times before you're done.
And they all do kind of look the same. They do. I mean, they really do. So some of these documents that we sign at closing, they look like something that we've already signed before. So why are we signing these things 3 and 4 and 5 times? Even though they may be different, they look all the same.
Right. So when you borrow money, they're going to check you on the terrorist watch list. They're going to make sure you're not on the Patriot Act bad boy list. So when you sit down and you take loan application, they're checking to make sure you're not there. We actually check and make sure you're not there also. And I've actually had people show up. It's a common name search. We have to have these poor little people come in with their IDs showing us that they're...
Oh, my goodness.
Oh, I felt so bad. I'm like thinking they're thinking we're going to call ICE and have them hauled off or something. They're like paranoid. And so we're recertifying at closing that was done. We're having you sign the documents that allow the bank to re-verify tax returns should they so desire to do so. They're going to re-verify your social, and all of this is to help prevent loan fraud, and that actually keeps your costs down, because more loan fraud that's committed, the more that bank's going to charge people to borrow money.
Wow. Okay. Tell us how we can get in contact with you again, all your information before we go to commercial.
Okay. Michelle Woods with Interstate Title. We've been in business for about 10 years. I'm the owner. I've actually been doing this for 25 years. You can reach us at 301-830-8080, or you can email me, Michelle, Michelle, at istitle.com.
And I am Karen Baker, CEO and founder of Casey Baker and Associates, and we ensure your financial wellness. We have an office here at the National Harbor as well as in Tysons. You can reach us by going to our website, which is www.caseybakerandassociates.com, or you can email me at karen@caseybakerandassociates.com, or you can contact us at 1-866-952-5862. We'll be right back. Hello, my name is Karen Baker, founder and owner of Casey Baker and Associates. Casey Baker and Associates focuses on promoting financial security through ensuring financial wellness. Our vision is to foster financial wellness by serving the community, teaching wealth-building strategies to all communities, and developing mentorship programs for the young individuals. Casey Baker and Associates takes an educational approach so that everyone in the community can understand the concepts that help to improve financial literacy. As a financial advisor with over 2 decades of experience, I plan to use my expertise to serve you and your financial wellness needs. I am an established author of business and financial articles. This includes writing articles for It's Your Business Quarterly magazine for over 10 years. I also served as the ambassador for the Prince George's County Chamber of Commerce for many years. I am a certified financial education instructor and business leader who is ready to work with you and the wealth-credentialed Casey Baker and Associates team to help you achieve your financial goals. Join us so we can help you, like we have helped thousands of others by connecting with us at www.caseybakerandassociates.com. Welcome back to Let's Talk Money with KC. My guest, amazing Michelle Woods from Interstate Title and Escrow. And we are having her explain to us the process of titling and the difference between the deed of trust, and the notes. And I tell you, I've always felt like every home that I've purchased, I felt like I was signing away my firstborn because there was just so many documents. It's like, didn't I just sign that? So prior to commercial, I asked her, I said, Michelle, why does it seem like we are just re-signing these documents? Okay, well, I know because of all the terrorists and the Patriot Act and making sure that we are who we say we are and all that. But geez, it seems like there is another way that with all technology and everything else, it seems like there should be a way that, they're fingerprinting, scanning the eye. I'm just saying.
We're not doing retinal scan. Oh, Lord.
I'm just saying, this seems like it could be something else to,
if you want to be fraudulent, okay, so look into your business. If I wanted to defraud the insurance company, do you know of ways I could do it? Because you've seen it happen.
Well, but there's so many more, though. But there's so many.
Right. So you guys do a whole lot of things to ensure I'm not defrauding you when I take out a life insurance policy. Like you may require we get a medical exam, or we have blood work done, or heaven forbid pee in a cup. That's horrible. Right. We have to do it. We have to show to you that what we told you is true. We have to do these proofs. And if you didn't go through these proofs, because we probably sit there and think, oh my gosh, would you like to have all my blood? And, then you got to do what you feel is, I'm a very modest person. So I'm like, you want me to do what in a cup? I don't pee in that cup. So, each of our industries have this very invasive thing.
Very true.
So we're trying to get you to pay for something if we kick the bucket. So you want to make sure we're going to live a decent amount of time. So the premium, honestly, the premiums have to go in. You can't just have everybody dying right after they get a policy, or there would never be enough money to pay out these policies. So we're making sure, because when they buy the title policy that guarantees their ownership, we want to make sure, because there is only one premium once. You guys collect a monthly premium. We collect one premium when they buy that house, and that's it. That's got to sustain. So we're talking about a different pool of money. And this is how insurance works. That to make sure, so we have to go through these major lengths to make sure we have done as much as we can to keep people from being fraudulent. Now, if somebody wants to be fraudulent, they're just going to be fraudulent. We had one years ago. They were buying a house with a VA loan. You'd think you get checked 6 ways to Sunday on a vet loan, right? They got power of attorney from the vet. Somebody notarized said power of attorney.
Oh my
goodness. The vet never signed the power of attorney. Money was borrowed on this house. They eventually defaulted under the vet's VA eligibility, which means he can't use it again until that problem's fixed. And not only did they just default under it under fraudulent terms, they hacked up the house with a axe and took all the cabinets out and busted up the fireplace. So And because they were angry that they were getting kicked out. So, first of all, they committed fraud. Second of all, they didn't make their payment. Third of all, I guess they thought they could live there till Jesus returned without making their payment.
Oh, goodness.
And fourth of all, because they're mad, they destroyed the property.
The property.
Yeah, so the bank's got to fix all that stuff before reselling it or sell it at a huge loss. So when people want to commit fraud, they're going to commit fraud. So really when you're signing paperwork, you're recertifying that you're being truthful in what you told the bank. So if you go through default and they have to take your collateral, if they have to go to court and sue you for deficiencies, if they choose to or what have you, or you committed fraud and that's a criminal offense, then they have backup documentation to prove that you said X, Y, and Z. Now, people, of course, do make legitimate mistakes. So, like, when we explain something, like one of the documents says that we went over the closing statement, it's true and accurate to the contract, and I usually add to the best of your knowledge and belief. My client is not the expert sitting at the table.
Right.
There's a lot of money moving around. There's a lot of information moving around. So, you know, did the sales price, is that what you paid for the house? Is this what you paid for this? You know, we go over the numbers. So they're certifying that this document matches this document, and we don't sit there and review them side by side. So you are certifying to something to the best of your knowledge and belief.
Okay.
So if you sign it and something's wrong, did you commit fraud? No. It was to the best of your knowledge and the belief. But if you sign something knowingly having defrauded the bank, that's a criminal offense. Though you're not just talking about getting your property foreclosed on.
Yes, most definitely. Okay, so what are the rules about the closing date, and why is this date so important?
So in the past, we had, real estate was much easier in my early days, much easier. So we had a 2-page document, which we called the HUD-1. People thought that meant they were buying a HUD property. It doesn't have anything to do with that. It has to do with the fact that Housing and Urban Development is the government entity that oversees real estate. So we had the HUD-1. The market fell into the toilet. That thing tumbled on into the abyss. So they revised it and made new rules so that, because we did, unfortunately, not just do people who buy and sell properties commit fraud, but there are people in the industry who are wrongdoers, and I'm sad to say that. So sometimes we would have people who would underquote fees to get the deal, and then we're getting to the table, and I actually had one time somebody needed $10,000 more than they were told, 10 grand. They had it, but it was crazy, and the person who quoted the fees just said, well, they were customary charges to your state, and I don't work in your state regularly, so I didn't know. So now that can't happen. And then they took it a step further. So that change happened in 2010. They created the Consumer Financial Protection Bureau to watch over this stuff, you know, a new bureaucracy. And then they created what they call the closing disclosure. So we call it CD for short. Do you know how hard that was for me to get used to? CD is a round silver thing that you stick in the CD player. The young kids, they don't care, because to them it was MP3 players and, you know, digital devices. For us, I mean, legit, it was a CD.
Right.
Went in. So we call it the closing disclosure. And now things got crazy because the buyer's information had to be separate from the seller's information. Privacy went to a whole new level. They were helping keep down the potential of a new market crisis. But in that market crisis, there was a lot of fraud going on. So ethics is what prevents that fraud. So when that happened, they said they want to make sure the client actually got to see the numbers before closing, where before there was no rule about that.
Okay.
So now, and every lender views it differently, so you have to really talk with your lender. So we'll use the furthest out. So the lender has to get you the CD, or closing disclosure, 3 days prior to closing. 3. Did you see that? 3. 3 days.
I'm selling you the business.
3 days.
I'm giving you the business.
That's because you got to take mine.
Okay, go ahead.
So say that's Monday.
Uh-huh.
So some lenders say the 3 days would then be Tuesday, Wednesday, Thursday for review.
Okay.
And they have to digitally sign it or physically sign it on Monday for that Tuesday, Wednesday, Thursday to count. Then they actually call settlement the day of consummation. We call it the day of settlement. I'm not calling it consummation. I am so sorry. No offense to, live land out there.
Okay.
So then we come to closing. So closing's technically on the 5th day. But some lenders count the day they get it for review as one of the 3 days, so then we could close on Thursday. Others count the review day and closing day as the 3 days, so we could push out the document on Monday and close on Wednesday. So we got to kind of, and it was based on, so kid you not. I was being told what the new rule was. I'm not a very trusting person. I'm so sorry. So I read the bullet points of the rule. That was 90 pages. And I found that things I was told they weren't accurate.
Right.
And because every lender was viewing things differently, and the realtors are looking at us like, what are we doing? What's the rule? And then I actually read almost all of the 1,500 page.
Oh my goodness, Michelle.
Bill that they put out there. Mm-hmm. Well, a lot of it was like who was who, and half of it's junk. To read and understand better, my title insurance underwriter, she goes, you would have read that.
I was thinking that. But go ahead.
Okay, so people are coming to me. So you're a professional realtor. You've been doing this for years. So you're coming to me and you're saying, so what exactly is going on? What's right? I get this answer. I get this answer. They deal with multiple lenders. Everybody's telling them something different. So the closing date and the review date became so important that people's closings will actually get delayed because there is zero tolerance and zero reason to close and say you have a hardship to close in less than those 3 days. You may not. They don't care. You can be homeless, sitting on a curb. You could have all your kids and dogs into the hotel room. Your rate could be getting ready to expire. What if you got a fabulous rate and all of a sudden the Fed increased rates massively? You could go from a 3% to a 5% overnight.
Right.
And there's nothing they could do. There was nothing written into the law to give you anything less.
That's crazy.
There's no hardship reasons.
That's crazy.
Yep, it is. It's ridiculous. So, like, if you borrow money, the lender will hound you to sign that document. Hound you.
Okay. Well, let's give your information again. That's a lot.
Hey, that was a quick 15 minutes.
And
I know. So, who wants to do my job? Our industry's looking for millennials.
I think every industry is looking for millennials because they're the future. They're the future. They're the wave of the future.
They are, and they're not sure what they want to do.
Yeah.
So, okay, Michelle Woods, Interstate Title, office line 301-830-8080.
Karen Baker, Casey Baker and Associates, and you can contact me through www.caseybakerandassociates.com or email me at karen@caseybakerandassociates, or you can call me at 1-866-586-9522, and we will be right back after this commercial. Hello, my name is Karen Baker, founder and owner of Casey Baker and Associates. Casey Baker and Associates focuses on promoting financial security through ensuring financial wellness. Our vision is to foster financial wellness by serving the community, teaching wealth-building strategies to all communities, and developing mentorship programs for the young individuals. Casey Baker and Associates takes an educational approach so that everyone in the community can understand the concepts that help to improve financial literacy. As a financial advisor with over 2 decades of experience, I plan to use my expertise to serve you and your financial wellness needs. I am an established author of business and financial articles. This includes writing articles for It's Your Business Quarterly magazine for over 10 years. I also served as the ambassador for the Prince George's County Chamber of Commerce for many years. I am a certified financial education instructor and business leader who is ready to work with you and the wealth-credentialed Casey Baker and Associates team to help you achieve your financial goals. Join us so we can help you, like we have helped thousands of others by connecting with us at www.caseybakerandassociates.com. Welcome back to Let's Talk Money with KC. I am so excited having this conversation with my guest today from Michelle Woods from Interstate Title and Escrow, and we have been having a ball today. I've been asking her a lot of questions surrounding title, deeds, notes, deeds of trust, and mortgage, and I do have another question for you though, Michelle. Do some of the rules, of course, of closing vary from state to state? I would think they would, and are certain rules federal?
Yes, so yes to both. So your federal guidelines surround the closing disclosure we were talking about. So the federal government created this 5-page document, kind of consolidating some things together. They tell you up front, what you're going to pay over the 30 years. It's a little scary. They make sure you know your payment, all these things. So that's a federal document. And then if you're getting a federal loan like FHA, VA, USDA, rural development, then you're going to sign certain paperwork that belongs to them. So certain disclosures have to go out in certain periods of time federally. If you're refinancing, the federal government requires that you get a 3-day right to cancel. So if you sign on Monday, your loan sits Tuesday, Wednesday, Thursday, and then we'll fund out on Friday. So you have 3 days to decide if you did a dumb thing.
Okay.
Well, I've sat in a closing where people have done a dumb thing. I've sat where they really aren't changing their rate, but I don't even understand why they're refinancing. So it gives you that ability to go back and say, maybe this wasn't the best choice. You go and you talk to your, family, your spouse, your kids, your parents, and then they say, you really didn't save what you think you're saving, or why did you do that?
Right.
Then they give you the opportunity to back out of that.
Okay.
So that's federal, and you actually don't have any leeway in that either. It has to sit for those 3 days. If it's investment property, it funds the same day. You don't get any benefits as an investor. But the primary residence, they're trying to protect you from like predatory lending and stuff like that. Make sure you didn't do something silly.
Okay.
Some things are state. So like we were talking about Maryland and Virginia. So in Maryland, the only thing that'll transfer property is a physical deed or that foreclosure, an operation of law.
Okay.
In Virginia, a will actually transfer property. So you can go and file the will, and that actually changes the ownership, where that doesn't happen
Really?
here. Yeah, it's different. And they don't open necessarily estates all the time. They call their the person who governs the estate the executor,
right,
which is common language.
Right.
We call it personal representative. In
right.
Maryland, you get a letter of an administration. Mm-hmm. So it's a fiduciary responsibility. And fiduciary means that you have the financial responsibility to take care of something on somebody else's behalf.
Right.
Different states may deal with how they tax charters. I always jokingly call it my extortion fee. Sorry, state of Maryland. When, you have to file for those personal property taxes every year, and they charge you your $300 in extortion.
Right.
Yep, I send my paper up there with that money. And a different state may charge you differently. And then we'll encounter people who actually set their business in another state simply because their tax laws work better for them, and it helps with their tax implication. So a lot of things have to do with how we walk things through too. In Maryland, you have to walk through the treasurer's office first and then the clerk's office. It's a 2-step process to put anything on record. In Virginia, you walk right into the clerk's office. They don't go to the treasurer's office. You actually send tax money in separately. In Maryland, if your taxes are due and you go to present a deed to transfer property, they are like, not doing it. Hand over the tax money. Not even kidding. Better hand that tax money over. And in some counties, and it goes even further from just the state rules, but down to the local jurisdiction, like if you go into Charles County and it's public water sewer, you will not get on record without paying that water bill. Now, if you're in Prince George's, WSSC, I don't even know what their acronym stands for. I'm sure it's like Washington Sanitary Sewer something.
It is.
Oh, okay.
Yeah.
We just call it WSSC.
Okay.
You just send their check in separately after closing when they send you that final water bill. You can go to record without paying the water bill. So, and like in Calvert has some areas under the county municipality and you have to pay to get on record.
Okay.
And others have private water systems and you don't have to pay to get on record.
Right.
So every state, our job gets so complicated in that we have to know how the state, the local, the county, and in some cases the city. So you have town of La Plata, town of Indian Head, Annapolis is an incorporated town, Leonardtown's an incorporated town. I know Prince George's has some incorporated towns. So you have to deal with them too, and these incorporated towns have their own sets of taxes. So it's a multiple level thing. So that's why I say when people think I just come in and I'm like, here's my stack of papers I'm going to make you sign, hand me my $850 settlement fee. It's not really about that. And then they think once I leave the table, easy peasy, I'm out of there. But afterwards, I'm making sure taxes got paid and credited. The taxes get double paid. Like if it's tax time, the seller's mortgage lender sending in taxes. We're sending in taxes. Then you have to fight over it. And if they didn't accept my check and they accept the bank's check, then I got to get the seller to call the county to get their money back. And that's not easy. So we have all this stuff. We call it post-closing matters
Okay.
or meeting after settlement.
Right.
We're walking through all this stuff. We're making sure any debt the seller had to pay off, did it get released? The bank doesn't even have to begin filing those till 60 days after closing. That's when they're supposed to file them by, that 60 days.
Okay.
But some banks don't. And we got to chase it down. Or it was a judgment and we got to get back with the attorney and get him to file the order of satisfaction. So there's a lot that goes on to it afterwards. So we're still working for that client even
Right.
when we're done. You moved into your house, you unpacked everything,
Right.
put your
You're still
dishes
working.
away.
Yeah, you're still working.
I'm
for 'em.
still touching your file.
Wow. Okay.
Yeah.
So, through this whole process, if you had to give a homeowner tips, 3 tips.
3.
3.
Probably more than my 3.
Yeah. If you had to give our viewers 3 tips on something that they really need to be thinking about, they need to do, they need to understand, what would that be?
Okay. Number 1, I'm very, very, very pro realtor. I know a lot of people think they can do it on their own. Here's your deal. If you sit down and read a residential real estate contract, like a regular average homeowner drawn up contract doesn't have these disclosures. Right at the top, it says, this is a legally binding document. Seek legal advice if you don't know what you're doing or don't know what you're reading. I'm sure it says it more eloquently than that. So number 1 is that realtor is there to actually represent your best interest in that transaction. I have seen where people try to negotiate out their own stuff and they end up in a much worse position than they would have had they had a professional. You might choose to let an inspection item go that you really shouldn't have let go, or you may not know that something's a standard in the industry that you should be asking for or should be demanding be taken care of. You know, if the appraisal comes back with safety issues, you're personally negotiating with the seller, and the seller might be more savvy than you.
Right.
Or the buyer might be more savvy than the seller. So, yes, you have to pay commission. I know paying fees is a drag. Nobody wants to do these things. But hire a real estate agent. Interview several real estate agents. You might like working with a male. You might like working with a female. You might like working with a team. You might like working with, they might need to be Italian. I don't know. People like working with people for particular reasons.
Right.
So that's number 1. Number 2, work with a loan officer that somebody knows. I've seen, that's the worst too. Like, it's bad enough if you lose money negotiating your contract or something falls into the abyss or you sign something you shouldn't have.
Right.
You're going to pay that loan for 30 years. 30 years. You better know what's going in it. And I have seen great loan officers and I've seen not so great loan officers. So your loan officer should be able to tell you options. If you come to them and you say, I'm a vet, I want a veteran loan, and they just quote you on that, meh, meh, out the door you go. I'm not kidding you. I see this.
Oh my goodness.
That loan officer should sit down and talk to you about your whole picture. What's your income? What's your choices? There's loans that you can get in with no money down. I mean, vets get vet loans. But, you know, there's USDA, rural development. I mean, some areas in Charles and Prince George's and even St. Mary's, you can't get some of these because they're too dense and urban. Right. But there's options for you. There's down payment assistance programs with Maryland. I have a young couple who, I don't even know how they got this little teeny weeny 2.8% interest rate. And yeah, they're getting a rural development loan. And it's like, I'm like, go on. And they're a family of 6 with 3.5 kids. One's on the way. It's going to be 4 boys. So they needed some space and some, but they're like squeaking in, you know. It happens. So they were on their 3rd loan officer by the time this was going to actually happen. They had written a contract and they were like, we don't know if this is going to close now because all of a sudden we're being told we don't qualify. And we wrote a contract for less than we were told we qualify for. So what the heck is happening? Right. Yeah. So they went back to an original loan officer that I referred them to years ago, and they're working it out for them. Now, they'll probably get in and have like 50 cents left in their bank account. But you have to live somewhere. Right. And then the last thing I would probably tell people is don't be afraid to buy a house. It sounds like so much stuff is going on. It's very scary. But unless you go and camp out on your mama's sofa in the basement for the rest of your life, and someday she ain't going to be here, then you need to live somewhere, and it's better to build your own wealth and put that into your own property than it is to pay somebody rent. When you're 60 and you want to retire, you're going to pay rent? Because they ain't going to let you live there for free because you retired.
Right. That is really true. And real estate, everybody is coming to the United States to buy property. Everyone wants property, and I'm going to tell you, it's cheaper than rent. I mean, I know I purchased my first home when I was 20. I actually built my first home when I was 20, and it's interesting because when I was renting an apartment up in Northwest, it was a little over $1,000 because it was a 3-bedroom, and what made me decide to actually build was because I was looking for, now I had been there for some years, and someone just said, there's a new development coming up the street. Why don't you just go and see how much it is? And it went from over $1,000 to like $650. My mortgage was like $650. And it was a 3-bedroom townhouse, and I rented out all the rooms and ended up making a profit, for myself. So do not be afraid. And back then I didn't have a clue. I mean, I just literally just went on blind faith. Didn't know the loan officer.
That's
didn't know
Jesus was watching.
Yeah, Jesus was definitely watching this little crazy girl who just had a vision and a dream and wanted to build a home and was still in school. And so take that chance. It's yours. You don't have to worry about, the neighbors. You don't have to worry about parking. You don't have to, you know what I mean? So that is your first stage of creating wealth for yourself. That's one way. And it doesn't matter the age. I can't even remember, I don't even know how I actually qualified for the loan I can't remember that long ago. I mean, I know I had a full-time job and I was still in school. Can't remember how much the house actually was worth, but it was in Silver Spring. So you're talking about, over
You can get a house
years.
in Silver Spring now for $650 a month.
Yeah. It was 30 years ago. I mean, it was
Our first townhouse in Waldorf, we paid just under $6,000.
Okay.
And that was full payment, principal, interest, taxes, insurance.
Okay.
The whole thing, and I have no idea how we qualified for that. Now my kids are like, you made I'll just be honest. We each made $6 an hour because minimum wage. I know the millennial just fell over in the floor.
your daughter.
Well, well, now they're like, minimum wage needs to be $15 an hour. I'm like,
right.
I made more than minimum wage at $6 an hour. My husband and I both worked. We did get some bonus and overtime money. I'm not sure why somebody loaned us any money to buy this little sad house, and it took every dollar we had every month to pay the electric bill. Cable, guess how much our cable bill was? $20.
Get out of here.
$20.
Get out of here.
We got all the channels too. It wasn't like now where you get like 3 channels for $20.
You don't get anything for $20
no.
now.
So we eked our way by, but over the years we sold that one and then we built a larger home. So it works out. And sometimes I wonder why they gave us money for the bigger home.
It's just, you know what? It's amazing. I mean, really, it's God. Someone is watching over us, especially when we're young and we're, just taking a blind step out on faith.
Mm-hmm.
So I say to all the millennials, it's time. Get out of your mama's house. Go buy your own. You have a job. It's time. It really is time. So, guys, I thank you so much for tuning in with us today. I'm going to have Michelle give all of her information one more time. I'll give my information one more time. And then I want you guys to stay tuned. We're on here every Thursday from 2:30 to 3:30. I try to bring in industries that will help you, that will give you information that people are not just sitting down and going over with you, so that when you do decide to make that step towards your wealth, whatever it is, you'll have information. You can go back and rewind the shows to kind of find out, if it's on real estate, if it's on title, if it's on whatever it is. I'm trying to bring all of that to you. So Michelle, go ahead.
So, one more time, it's Michelle Woods with Interstate Title and Escrow, serving Maryland and Virginia. Our office line, 301-830-8080, and my email, michelle@istitle.com.
And I am Karen Casey with Casey Baker and Associates, and we ensure your financial health. You can get in contact with me by going to the website www.caseybakerandassociates.com, or you can email me at karen@caseybakerandassociates.com, or you can call me at 1-866-586-9522. Thank you so much for tuning in, and we'll see you next week.